Good morning, all, and welcome to another one of my videos. I hope you had a great weekend, by the way, and I hope you're ready for the week ahead. So, I have two pairs on watch today. Those are EuroCAD and Sugar USD. So, I'm going to break them down for you now without further ado. So, why am I looking at EuroCAD? You may ask. I am looking at EuroCAD because on the higher timeframes, the narrative as I see it, the picture that is being told to me based on the way that I trade, which is the Falcon strategy for anybody watching this video from outside of the Falcon community. And you can learn more about that if you're watching on YouTube via the link on my YouTube channel. But let's break this pair down for you now. So, on the higher time frames, we have this sharp hook point here. We have the sharp area of liquidity. Price moved down to this area very quickly, and then it moved up very quickly, which gives me a clue that a lot of liquidity was placed in this order, which is what dragged the price down and then caused it to rally to the upside very quickly. So, price pushes up, it comes down, it doesn't tap into this area. We haven't tapped into this area. Price moves sideways for a long period of time, and then we tap into this area, tap just below it, which is what we typically see with these higher time frame areas of liquidity, as opposed to the lower time frame liquidity points. We typically see price break the low, and people typically get themselves caught the wrong side of the market. On this occasion, we don't break that far below, but we do tap into this area, tap into the exchange of liquidity there, and then we see an aggressive move to the upside. So typically the market moves in a series of impulses and corrections. Okay, so what does that mean? So we tap into this area here, and then we have an impulse correction, potential continuation. That's typically how the market moves. So when I see price tap into a sharp area of liquidity, which is visible on all time frames, even the monthly chart, that is a good clue when we have an impulse followed by a correction that we're going to see further continuation, because price has no business coming back down to this area. Of course, contrary to some of the things I read from the people that message me and comment on some of my YouTube videos, the market the market can do anything at any stage. A lot of people use language when they comment on my YouTube videos or message me saying the market will do this and the market will do that. Well, I always find it interesting that the people that tell me what the market will do, you can tell are not profitable. And there are many ways that you can tell that. Whereas the people that I know that actually are profitable, I'm actually profitable myself for this year, don't claim to know what the market will do. And that's because, contrary to urban myth, you don't need to know what the market is going to do in order to make money. And that baffles the minds of most people that are not profitable. All you need to know what to do, all you need to know how to do is to know what all you need to know is what you're going to do, and then be able to manage your risk. Okay. So anyway, I've digressed a little bit, but if we just measure this, so we were talking about impulses and corrections. If we just measure this impulse and where it stopped there, where the top of that correction is, we know that the continuation. So when we have an impulse correction continuation, the continuation out of the correction tends to be of a similar length to the preceding impulse. Okay. Now, if that was the case, that would take us up to this area here, which would mean that we would break that high, get people caught the wrong side of the market, and potentially retrace to the downside. Or we may form continuation. We may form another correction afterwards and then go long. But there is so much that could happen. That's not really in my concern. My concern is that we've tapped into this low, we've had the impulse up, followed by the correction, and then I'm looking for further continuation to the upside. One thing that gives me a clue that we may, another positive confluence factor, as it were, is the fact that we have a near miss. So when price gets close, which is why I've got my ray line on there, when price gets close to a higher time frame area of liquidity such as this, but it doesn't quite tap it, that can often mean that there are still orders in that area that need to be filled before price can potentially come to the downside, which means that price is more likely to gravitate towards that area. Okay, and that it remains a good profit taking area because of the fact that it for anyone that gets long because it hasn't yet been tapped into. Okay, so this is what we call a near miss. So when I see a near miss, that is an additional positive confluence factor, which gives weight to the idea that this impulse correction continuation uh, is likely to play out. So the next thing I do is I drill down. We always do top down analysis, not bottom up analysis, which is what a lot of people do. So what do we have here? This just kind of confirms what I was just saying a moment ago. We have a sharp move down followed by a sharp move up, giving me a clue that there's potentially a lot of liquidity in this area. And one of the things that confirms that theory is on the flip side of what I was just saying on the weekly chart, is that we come all the way down to this area and we near miss it again. Okay, we get close to this area of value and we near miss it. What does that mean? Well, it means that this is likely what I call the FOMO leg, which is where many people would have seen price getting down to here. They would have identified this as their value area. And then what happens in a lot of instances is price comes close to this area. It starts to move. You see the bullish momentum there. And people fear that this move from this area is going without them. So this is why I call it the FOMO leg. So people start buying, yet it doesn't move up very impulsively. Why does it not move up very impulsively? Probably because some people are trying to buy this, whilst the orders that are in this area and the orders that are being placed in this area are dragging the mid price down. Of course, market price is the average of the mid price, is the average of the bid and the ask price. So you get this kind of pendulum effect of orders, which causes price to move up aggressively. Then we do get some momentum. However, look at this sharp move back. So when I see a sharp move up followed by a sharp move back, that is not indicative of an impulse correction continuation that's just going to keep going to the upside. It's more indicative that this move down was likely caused by orders that were being placed in this area, which dragged the mid price down, which made it even more likely that price is going to find its way down to this area. And you can see that's exactly what happens. At the end of this, we have what we call an ending structure. Okay, so I'm just going to talk about what an ending structure is. So we have a move down. We have this very corrective move down. Okay, and then we go into an ending structure. So there's not a great deal of structure to this other than the fact that it's just a bit of a long corrective running channel. But then you can see this has more depth to it. Okay, this is just a bit corrective. This has a little more depth to it, and we often see these when price is going to potentially reverse from an area of value. We see a piece of structure right at the end, and to some extent it's for the same reasons. Okay, so we get that move down, price comes close to this area again, people see it push up, they fear that those that have been waiting for it to get to this area of value fear that it's going without them, so they start buying, but price moves up very correctively again. Why? Because likely people are trying to buy this whilst orders that are sat down here and orders which are being placed down here are dragging price back down. So with all that being said, there's not a lot not a lot more about my thought process which I can tell you at this time, other than the fact that we have this ending structure. And if I just unhide, put that path tool back in its box and unhide the forecast, again, this may not be ready by the end of the day. We would likely need some momentum to kick in, but if we get a 1, 2, 3 which lines up with this area of value, then given that this is quite a large structure and it's kind of a reversal structure, I don't like to try and call the bottoms of reversal structures, because when a area of liquidity such as this is visible on the higher time frames, okay, it's important to zoom out. Typically speaking, these lows get broken. So that means that if I was to get long here, I'd be more likely to be tagged in, tagged out, price breaks the low, gets people caught the wrong side of the market because this is a higher time frame liquidity point, and then it pushes up, and then potentially this is where we talk about protecting the psychology. Potentially you're more reticent about taking an entry such as this because you've just been tagged in and tagged out, which has potentially affected your psychology. So I'm always thinking about all these things. And of course, if we were to get a move down to here by the end of the day, it would be quite impulsive. And my trading plan states that if we get down to an area of value or up to an area of value impulsively, then I wait for a push followed by a flag such as this in the opposite direction to confirm this correction here is the confirmation that those of us who trade the Falcon strategy look for, to confirm that a move is likely to head in one direction or the other. So if price pushes down to this area of value, and it would, I think, because it's a higher time frame liquidity point, it would likely break below it. If it did that, push back in, and we get a flag, then I will be looking to get long either within the flag. Okay, so if we have two tops like that, I would look to get long if we reject from this first bottom and push up, or I'd be looking to get long on the break of the flag. And you can see that I would be able to manage this up to this trend line and up to these first inflection points for something in the region of 5 to 6%. And that's what I'm doing. The reason I have my risk to reward tool on the chart as such is to ask myself the question, to help me answer the question, can I manage this trade? Because if I can manage the trade and get my risk off of the table, then it doesn't matter if price just suddenly retraces against me aggressively, because if it rejects from here, then I would likely have got out if I'm trailing my stop loss for something in the region of 2 to 3%. So that is Euro CAD, and I have an alert set just above that area of value to see if we are getting close to this area of value. And if that does not trigger, then I will not be looking to place a trade on this pair. So it's a similar story with sugar. So I'm going to zoom out to the higher time frames. So on this one, because this is because Euro CAD, one of the reasons this is last on the list is because this is kind of in a state of continuation. EuroCAD, we've tapped that low, and we already have that impulse correction continuation. So because although this is a reversal setup, it is on the higher time frame still in a state of continuation, because we have that impulse correction continuation. Whereas sugar is not really in a state of continuation. Okay, so we're kind of going against this move. We've tapped into we're kind of going it's a reversal, but we're kind of going against this move here. So but what we do have is there's not too much to see on the weekly chart. What we do have though, so I just moved this, there's something I wanted to touch on, which I've just remembered. So we have this area of value here, and we have this near miss again here. Remember me talking about when we have a near miss to this area here, or to an area like this, price is more likely to find its way down to there because we didn't quite tap into it. Okay, for the reasons previously expressed on on Euro CAD. We also have so last week's close. What's this one? So last week's close was a bullish. When we have a bullish wick, so when we have a green wick, a bullish candle with a wick above it, which wicks to the area of value, not through it. So notice that these candles here have both wicked to this area of value, not through it, and they're both green. Price is more likely to gravitate towards this area, back towards this area of value. So now I drill down. What do we have? We have a bullish wick there, which was not filled, which hasn't been filled yet. So for the same reasons as I just said on the weekly chart, this is more likely to be filled. What do we have here? A daily candle with a bullish wick, a green wick above it, more likely to be filled before price can move to the downside. If we just drill down again, what do we have? On the 4-hour chart, a bullish wick, okay, which is likely to be filled. We've filled that one, but we have another one there. What do we also know about these higher time frame liquidity points? We also know that typically, as I just said with EuroCAD, that we tend to catch people the wrong side of the market. We tend to break above before breaking to the downside, because people believe what was previously resistance becomes support once it's broken above, and because these brokers and ticker feed trading platforms put out statements saying sugar USD at 3 or 4 month high, whatever it is, just look at the date at the bottom of the screen, and that encourages people to start buying because they fear that they think it's just going to keep going. They think price is just going to keep going to the upside. So they start essentially buying the highs and selling the lows, not realizing that they are, if they're not using trend lines, that they're essentially buying into this 1, 2, 3 touch structure. Okay, so they're buying the highs and selling the lows, which is what we see repeatedly. So in this instance, I'm actually looking for price to push up to this trend line. And the reason being is because we have quite a lot of volume. If we just we have quite a lot of volume being built up here. And when we have a lot of volume being built up within a 1, 2, 3 move, so this is kind of what we call the middle section, you are more likely to be tagged in and tagged out if you're looking for just a tap above, followed by that, because of the volume that's been built up in this middle section, and particularly when the area of value is a long way away from the upper trend line of a piece of structure. So if it was closer like that, then I would be more inclined to, look for a tap above here and a push back down. But when the area of value is a long distance away from the upper trend line of a piece of structure, then and we have a what I call a voluminous or voluminous middle section such as this, that's when I want to see a break above out of this middle section to confirm that all the people that are trading within here are actually out. So then that gives me confirmation that, yes, the people bailing out of this middle section have finished bailing out, and that the move to the downside within this potential reversal structure is about to come to the downside. So what I'll be looking for, with all things being said and all of that analysis in mind, is I'll be looking for a push up to this trend line. Of course, because these are not as absolute as areas of value are, if we get close, if we get very, very close to this trend line, and we start pushing down, then I'm not going to be too much of a perfectionist, because these trend lines are just a guide. But if we push up to this trend line and ideally we break above it, we typically see people caught the wrong side of ray lines of areas of value. But sometimes, we do see people caught the wrong side of trend lines as well. So if we push up to this trend line, ideally break above it, push back in, and we get a flag, then I would be able to manage this. I'll be looking for a flag afterwards, and then I'll be looking to get short on the break of the flag or within it. A complete inverse of what I was looking for with EUR CAD, and then I will be able to manage this down to this trend line, down to these first inflection points for something in the region of 6.4%, depending on obviously the size of the flag. So I've got an alert set just to see if we push up to the ray line, because obviously the trend line is a bit of a moving target. And that's all I'm going to be looking for today, folks. I hope you've enjoyed this video. I'm trying to keep my charts as clean as possible and minimalistic as possible. Over the weekend, I've been tidying my office and making my office space even more minimalistic than it previously was, and I'm going to be doing that with the rest of my house as well, our house. And the statement that we hear a lot in the Falcon trading community is that the thing that we're taught is that the way you do one thing is the way you do everything. So if your house is very minimalistic, if your office space is very minimalistic, your charts will likely be too. Or if they weren't to start with, they will be after you've finished making everything within your domain, your space, minimalistic. So, and you don't need lots of clutter on your charts, folks. All you need is to understand price action. And if you understand price action, you do not need a million different indicators on your chart, which only cause confusion, which in turn causes anxiety. And why do you think the brokers want you to use loads of indicators? Because if indicators causes confusion, which causes anxiety, then you're likely to lose money, because psychology is the number one thing in trading. So if you're anxious all the time, you're not going to be able to trade effectively. And the brokers know this, and they know exactly what they're doing. So we have to be critical thinkers, think outside the box, and do the opposite of what the majority of people are doing. Anyway, folks, I've rambled on for long enough. I hope you've enjoyed this video, and I will see you again in tomorrow's video, providing I have a pair or pairs on watch, or if I have actually placed a trade. Speak to you again soon, folks.